Hello everybody, welcome back. Let's have a look at Bitcoin specifically to start with, and then we'll move on to traditional markets just to, I suppose, give a bit more of an overview as to what it is that I'm talking about here. For Bitcoin, I know as bad as it looks, there is some vibes I'm getting just on this chart on the 4 hourly, on the daily, which is that if we were to more or less stay static at this price level, arguably a little bit more, so edge towards and stay above 17,000. The reason I say that's not just because it's 17,000, it's the 10 and the 21 exponential moving average that we can stay above. There is a chance that we move back into the box. Now, I'm not saying that that's going to happen, because at the moment we don't have any of the signs or signals to suggest that that is going to happen. But the fact that we haven't quite dumped quite yet is well, reassuring is probably not the correct word, but it's hopeful. Let's put it like that. It's hopeful. Again, December. We're moving towards Christmas now. Me and anyone, I suppose, with a rational mindset is probably not going to be over trading any of these areas, because you don't want to be going over Christmas with trades in your head. You want to enjoy the money that you've made, have a fresh outlook for next year, and start the game all over again, basically. And so I don't think there's a great deal of trading going on. But with that in mind, that means that there's not likely to be an enormous amount of selling take place as well. Trading is going to be flat. Buyers and sellers basically away for vacation. You can make the case that for the most part, sellers have left. But there's always going to be red candles. So the reason I'm saying this is this 21 exponential is coming in currently on the daily at just at 17,000 flat. Now, the last time we tagged that was over here. We got a tag 2 days ago. And that's where we got the rejection from. The rejection wasn't that steep, but since the rejection, we've gone below the 10 and the 21. Now, when it comes to momentum, we do have still like a normal consolidation vibe on the MACD, the RSI, and the money flow index. But the MACD, despite being below this 0 point, and obviously we can't get particularly bullish until we're back above it, we are looking to diverge on the histogram, looking for another tick back up. Now, I was having a look at this historically, as in like recent history, and the last time we saw a similar signature to this, although it probably was a little worse than this, but a similar signature was back around here, September to October, leading into this rally that well, basically led us up to the 200, not the 200, the descending triangle. And this probably would have broken out from here, moved up to the 200 exponential if it wasn't for FTX. And this is what the S&P did. This is what most things did. They rallied up in this everything bounced 2.0. And the MACD gives us an idea of almost like an accumulation vibe ready for a breakout. And it started September as we crossed above, snaked our way, but going sideways, but crossing up to the 0 point. And as soon as we managed to reclaim that on the MACD, we completed our rally. We went up from the back end of October to the very beginning of November, where FTX said it was, no more is to be had anymore. So we're getting a similar kind of read here, basically. So sideways and up price action, histogram tick, crossing up towards the 0 point, and then making a negative cross back down to the support, which was 16,500. A few little wicks below, but more or less 16,500 has been tagged. So if we just take it back down to a 4 hourly, and again, I'm not trying to spin this in a bullish light. I'm just showing you, what happened previously the last time we had a similar read to this. If we look at the 4 hourly, we are doing something kind of similar on the very short term time frame. So a positive crossover here, diverging up to the 0 point without crossing above it. So we're teetering on the edge of maybe a small bullish breakout, which should probably take us to around 17,000, well, less than 17,200, which is basically the 200 exponential on the 4 hourly. Again, there's nothing on this chart to me to suggest take this trade. It's more of an observation of momentum creeping or lack of weakness. Now, that's more or less all there is to be said about Bitcoin. But we all know that trading Bitcoin is like an afterthought of traditional markets. First of all, S&P, but behind all of that is the Forex market we broke down yesterday, which is still relatively okay in terms of keeping the dollar kind of weak, although I do expect a spike on the Dixie at some point soon. I don't expect a new all-time high on the Dixie, but I do expect to see a spike. I've been saying that for a couple of weeks since we got out of our trades, basically, from the everything bounce. So we knew that this was going to be the level that we were going to have a reaction from, and we sort of had one, but now we don't. Now we're back down to 104, basically, which is fine, but it's not looking particularly strong on the Dixie. So let's start with the S&P. So yesterday we did bounce from that trend line, which was hopeful. Again, hopeful. S&P closed up just under 1.5%, which is fine. Again, this is because forex pairs have been relatively stable. I wouldn't put it down particularly too much down to the chart itself. The chart has tagged this horizontal, and again, you can see the relevance of this area. It's not the greatest of all areas. We're still below all major moving averages, so it's not anything other than a little bit of a bounce really after such a significant sell-off, to which we shorted on the. We enjoyed that short, didn't we? It's all I posted those shorts. Like I said, the everything bounce 2.0 was going to come to an end most likely around here, and if we do gain legs after this, then we can call it something new. But for the moment, we just treated it like this one. Everything bounce 1, everything bounce 2. Now what we're looking for would be basically a change of behavior if we break outside of the descending triangle, which we haven't done. We're still in the center of it, but we timed this as far as thinking, how is this a problem at the moment? And the moment it's not a problem. We want to break out of this before 70 to 75% of the apex, assuming that this is the bottom, which I'm under the assumption that this is the bottom for traditional markets. No guarantees, but there's a good chance that it is. And so, as far as the formation is concerned, we've still got plenty of time to meander around here, maybe even form a double bottom before coming back out to break out before we've reached 70% of the size of this triangle, which is that's how you want to do it really. So this little bounce that we've had here sort of finished off at the 50 simple moving average yesterday. Now, if the forex pairs remain static still today, which there is a reasonable chance that they will, we might gain a little bit more ground on the S&P, taking this up to just short of 4,000. Bollinger Band Center, basically, that would be a good look. Maybe even the 200 and 200 simple moving average there, 200 EMA, 200 MA. Maybe we even revisit the top and break out. I don't know. But what I'm trying to say here is that the S&P is not particularly bearish, although it's certainly not bullish while you're in a descending triangle like this. So again, I'm all out of here. I might play some derivatives if I've got time, but to be honest, you got kids. I've got to make journeys. I've got to prepare for all this other stuff around Christmas. It's probably not the greatest time for me to make these sort of trades, especially on a setup which is not as clear as this one was or this one was. They were both very clear trading setups, and that's what's going to carry me through Christmas, really, those sort of trades. And I'm not willing to make any calls at this specific area. This was a bit of a gambly area even yesterday when I was saying if we break down from here, then terrible. If we bounce from here, then fine. It's 60-40 in favor of bulls is what I was saying. I still think it's more or less the same, 60-40 in favor of bulls. So Dixie at support, S&P got plenty of resistance all the way above us, and Bitcoin basically meandering, hoping to hold. Now, I still have some hope for this dominance chart to reject here. I know it's not the popular thing. I see popular Twitter people tweeting about how this is ready for a breakout and things like that. And until we break out from this area, really, this 42% dominance area, I can't say that they're right or wrong. But just applying my TA to it, which is never perfect, obviously, but just applying my TA to it, I still think that there is a chance of a rejection here. Now, remember what I said about late December being terrible for trading, being terrible for everything. And this doesn't necessarily mean that you're going to make any money on alts. It might mean that you just gain sats. It might mean nothing. It could break out and it'd be devastating. But there is evidence to suggest that a rejection from this level is not unlikely. Let's put it like that. So not that we can overlay the money flow index to a great extent to something like the Bitcoin dominance chart. It's not really what the money flow index is designed for. But the last time we got such overheated reads was over here prior to the biggest alt season, the millionaire starter kit that we got in so graciously at the very top and enjoyed that entire ride of all those thousands of percents that we made, which feels like a distant memory, but to which most of us hopefully are still, thriving off the back of. Now, we're seeing a money flow index read of quite high on the on this dominance chart. We do have a pump signal, however, so recognize that. So, money flow index doesn't navigate the absolute top, but it does tell you when things are getting peaky. This is a good example. It navigated a peak, not the peak. Other ones would tell us that this one got the peak. This one over here got a peak. So this is most likely, if anything, going to be a peak and not the peak. The reason I say that is because we're only 42% dominant. This is crazy. I would have expected this to have rallied many moons ago, given the fact that we're in a bear market for so long. We've been stuck down at these low levels for such a long period of time. But it is crazy, and this is why I think thinking about altcoins leading into the next bull market, which is probably going to begin next year. So we don't really have much to worry about when it comes to buying, holding, staking, long-term stuff. The only thing you really need to consider is where you're going to do it on, what platform you're going to do it on. But it doesn't particularly faze me too much about buying and holding for the long term, because this is what a bear market looks like now, opposed to what a bear market looks like previously, which was this. Well, I mean, that was bear market into bull market. This is definitely very different. This is extremely different. But again, we've gone through all this before. And it doesn't mean buy baby Doge, Elon, Moon, safe, Mars token or whatever. It means think about it rationally. Who's a sensible blockchain company with some realistic goals ahead of them, Right, so with all that said, I still think that there is a chance that we do find a rejection here, although there's absolutely no guarantees, because there is a pump signal. This is only 42% dominance. It's not as significant as the one that we got over here back in the summer, where we absolutely crushed the altcoin market in the face of everybody saying that this is a crazy thing to do. Again, I'm not right every time, but I'm right enough to do it as a living. So, I'm not willing to put an enormous amount into alts around here. I already put some in. I had to take it out. I'm thinking if I start to see a reaction, I'll put money back in again, flip some of those bitcoins into altcoins. I have been stung quite quickly on the first attempt to do this, so I'm not willing to put in my life savings of bitcoins. So, it's taken me years to accumulate all the bitcoins I've got, and I don't want to part with them at such a small area of resistance, but there is still that chance. And when you look at the state of some altcoins at the moment, they are absolutely wrecked. So wrecked that it reminds me similar of what it was like over here. People were talking about here, sorry. I remember when I made the rotation here, people were saying, no, but altcoins are dead. They're all a scam. What you got to understand is that the Bitcoin is going to remain dominant for a long period of time. And it really didn't take long at all for them to say, what was I thinking? Better buy some of that baby Doge Elon furry face dog coin. So, generally speaking, for the most part, trading is counterintuitive, and that certainly comes with sentiment too. You see the sentiment decline and dwindle. This is why the Bitcoin Fear and Greed Index can be so useful at times, just to factor into sentiment overlaying onto the charts. And that's not as low as I'd like it to be honest with you. But any speak of altcoins right now is met with a very sharp slap to the face, going, "You don't know what you're talking about. This is the time now for altcoins to die, because FTX has destroyed it for everybody." Well, I've heard that so many times. I appreciate everyone's new to trading at some point. Whether you're in it 6 months, a year, 2 years, or whatever. But for the most part, the masses get it wrong, and the smaller portion of traders get it right. You buy in the red for the most part, and you sell in the green. And this is a difficult thing for most people to do, because it goes against everything that's in front of them. It's so counterintuitive. So, like I say, I'm not trying to put this area highlight this as the best opportunity you've ever seen. It's certainly not one of these opportunities. These come around maybe once every few years, but something like this can emerge. And again, let's not overstate it. It's really not to be overstated. It's just a small area of resistance to which we would find a peak and not the peak, you know. Anyway, I'm going to leave with you there. There's not a great deal more to say. I'm going to take my old banger of a laptop away with me, so you might see some half-baked videos creep out over Christmas. Not that I imagine there'll be a great deal to say, but I will try and make some videos if something special happens on the chart, just so we can try and digest what it is that we're seeing. But other than that, this might be my last video until I get back after Christmas. So, if that is the case, I wish you all a good Christmas. And I'll be back before the new year, so I don't need to wish you that yet. But have a good Christmas, and just try and play it safe, really. The best thing to do at this stage now, realistically, is to pretty much just wait on the sidelines, because the bear market is likely due to end any moment, really, if it hasn't already. As in, like, for traditional markets, I think there's a very good chance that the bottom is in on that, and we just need crypto to gain a little bit of ground and a little bit more confidence. But anything is possible, certainly, and this is why I say this area specifically is neither here nor there. 60-40 is not good odds for anything. If you were in hospital and someone gave you 60-40 chance of living, you wouldn't sleep particularly well that night. You'd still have some reservations about your destination, but you know, it still has, you know, yeah, it's a little bit more in favour of the bulls, ever so slightly, but this isn't, you know, anything massive or amazing. It's just very short-term time frame stuff, and it does require Forex to behave itself and traditional markets to behave themselves. And crypto is literally the shadow of the beast, which is in control, which, to be fair, is still very much a central bank's business. Right, I'll leave it with you there. Thanks for watching. Merry Christmas.